The US stock market has been surging for 6 weeks straight, and if history is any indication, this is just the beginning. Today, I am going to show you where the money is flowing, what areas I am focused on, and 2 new stocks I am buying right now. Now, I do this every week, so if you are not yet a subscriber, click the button, subscribe to the channel, that way these videos will show up in your feed. So, let's look at today. Now this is the SP 500, and boy, what a roller coaster we were on today. The market gapped down this morning, sold off all the way until lunch, and then rallied to recover pretty much all of the losses. And the initial sell came from a new inflation report. U.S. Bureau of Labor Statistics announced that CPI, Consumer Price Index inflation, rose 0.6% in April. It does not mean inflation is 0.6%. It means the rate things were going up increased by 0.5%. And if you look at the official report, man, they make this stuff look boring, unadjusted 12 months. So versus April of the previous year, inflation is currently sitting at 3.8%. And a lot of this, of course, is driven by energy costs, primary oil, and gasoline. But that does not mean everything is a loser. In fact, the recovery today is a really nice sign of strength. It shows that nothing can hold this market back. Not above average inflation, which typically lowers the odds we are going to get rate cuts. Not a war with Iran, not a closed Strait of Hormuz, not rising oil prices. Despite all this, the index continues to paint new highs, and that is the kind of market you want to be invested in. So let's look at our industry strength indicator. Now this tracks the top 40 areas of the market, top 40 subsectors in terms of performance over the last 1, 2, 3, 6-month periods, by the way. If you are not already a member, click the link in the description. We have made you a QR code down over there. Scan that. You can join it. It's $5 for the entire year. You will get this indicator live weekly 1-hour sessions with me, access to my team, and a ton of stuff. It is an absolute no-brainer. It is just $5. But what this does is show us what is rising the most, and all things being equal, the sectors of the market showing the biggest gain, the ones going up the most, are the ones where the big institutions are buying. That is what is leading the market, and semiconductors have been an absolute tear. A lot of these are very extended. However, you got Intel up over 200% in 2 months. You got AMD that has doubled. These are very, very stretched, but there are a couple of other areas actually rising up the ranks, and this is what I want to see. One of them is crypto and digital payments. It has been a crypto winter for my crypto guys out there. They have massively lagged, and now they are beginning to rise up the ranks. So it is one of the top performing areas over the last 2 months. Over the last 1 month, it is a big time leader, and there is a stock that benefits directly when crypto is strong, and that is Coinbase. Now, Coinbase is a crypto exchange broker. It is where you go log in and you buy, and it stands to reason when Bitcoin, Ethereum, and the crypto coins are surging, more people are opening accounts, more people are buying, they are generating more commissions, and when crypto is stalling, less so. And that directly affects the bottom line of Coinbase. So if you can time the moves in the crypto market, let's just overlay Bitcoin with this. Notice it moves just about lock, stock, and barrel. When Bitcoin in blue rises, so does Coinbase. When it pulls back, so does Coinbase. Pretty much moves together, and we have Bitcoin rounding out the bottom here, beginning to run higher, and Coinbase setting up to follow suit. So I think this is a stock we can buy in here on a breakout above this kind of 210 to 215 area. It tried to peek its head out there on Monday, pulled back a little bit today with the overall market weakness, but this is exactly the kind of shallowing formation we want to see off the lows after it has had a big decline. And this is a big decline. It is a 60 to 70% drop in the last year. You want to see that consolidation, you want to see it absorbing that supply, forming this kind of rounded bottom. You want these dips to become shallower and less severe, and then it should break out and push higher from there. So if I bought in here at a break of 220, I would be targeting kind of this 275 range for the first piece, followed by a big target of more like 320 to 340 right up in here. So I think Coinbase is viable on a breakout above today's high. So above $218, I would put a stop at the low of that. You have the support of the 10 to 50-day moving averages, and you should have a nice clean run, higher assuming cryptos stay strong. Now, the other stock I want to look at is in the rare earth sector. Rare earth metals are another one that gets really hot and really cold, but notice it is beginning to rise up these ranks. In fact, over the last year, it is the leading group of the market, second being semiconductors. So it is not a group we want to let go, and one stock in this group is Tronix Holdings, ticker TRX. Now, the relative strength rating on this you can see is a 96. That means in terms of price performance over the last year, it is outperforming 96% of stocks in the market. So it has the things we need. We want high RS, we want a stock that is leading, and when we get a little bit of weakness, and I guess this morning is the closest thing to weakness we have seen, I want to buy this on pullbacks. And if you go back and look here at TRX, it is a bit sloppy, but you see kind of the same thing we are looking at in Coinbase, where you get the big decline. It forms this rounded bottom, kind of compresses, tightens up, and then breaks out and pushes higher. So here's the breakout and the rule for these new stage 2 breakouts. Especially strong ones like this that are running 30 to 50% is always by the first touch of the 50-day moving average average. So the two lines on my chart, this is the 200-day simple moving average, and this is the 50-day simple moving average. Notice back here in March, it came and just kissed it and surged higher. It continued to print highs, pushing right to it right here. I think this is a perfect pullback buy in a very strong market, in a very strong group, and you can buy it in here and not risk a ton of money. I mean, it is sitting at around 8.78 post-market. I can risk call it 7%, maybe stop at like 8.15, and it is also through earnings. It had an earnings report on last Wednesday. The stock dipped into the 50 holding right in there consolidating, so I think it is a great time to add on. But now I want to talk about something deeper. Why do asset prices keep going up when the world feels like it is in crisis? I have seen people confused about why the US stock market hits new all-time highs during a war, or why the Japanese stock market is at a global all-time high right now. We are sitting in the middle of a conflict that seems focused on destroying the global economy. We are expecting a collapse in living standards for ordinary people, and yet stock markets are performing like we are in a golden age. The UK market is up 21% in a year. Spain is up 32%. Gold has gone up nearly 100% in 2 years. Silver has gone up 174%. A lot of people think when the economy is bad, the stock market should go down, but the reality of 2026 is totally different. We saw it in 2008, we saw it in 2011, and we saw it during COVID. Every time there is a massive economic crisis, asset prices eventually go higher. Why does this happen? The old narrative was all about interest rates. The idea was that central banks slash rates to zero, making it cheap to borrow. When interest rates are zero, nobody wants to keep money in a savings account. If a bank pays you nothing, you would rather own a house or a share in a company. But that story broke after COVID. Inflation spiked, interest rates went up to 5%, and yet asset prices kept rising. This is where most people get lost. But I have been predicting this for years because I focus on deficits and distribution. When a government runs a massive deficit, that money does not just vanish. It flows through the system and someone accumulates it. During COVID, governments borrowed and printed trillions of dollars in the UK. It was thousands per adult. In the US, even more. My background is in looking at where that money actually lands. The conclusion I came to in 2020, and what I see happening again now, is that these deficits land with the rich. If you give a billionaire or a massive corporation more money, they do not spend it on sandwiches. They are not cash constrained on their daily living. They take that excess liquidity and they buy assets. They buy the stocks you are watching. They buy the gold you are tracking. They buy the real estate that is becoming unaffordable for everyone else. Every crisis since 2008 has followed this playbook. The government borrows money, creates a massive redistribution of wealth, and that money piles up at the top. The result is a massive increase in inequality and a massive surge in asset prices. That is why you see the stock market hitting record highs while your rent is skyrocketing. It is also why interest rates did not stop the market after COVID. If you give the rich enough cash, they will keep buying assets even if rates are higher. In fact, if you give them enough money, they spend enough to drive up inflation, which forces rates up. So you get this weird environment where stocks and rates go up together. You need to recognize that high asset prices are not necessarily a sign of a healthy economy. Expensive assets mean ordinary people cannot afford a house. They mean you cannot afford to buy into a pension at a reasonable price. We are being squeezed out of financial stability while the top layers of society are drowning in cash. This is a crisis of distribution. And if we can solve a crisis just by a government running a deficit and giving it to the top, it means the resources were always there. I have been betting on these asset prices for a long time. I made money during the COVID rally, and I am making money in this 2026 surge, but I am not doing it because I think the economy is great. I am doing it because I understand the mechanics of how this inequality works. I focus on high relative strength stocks like TRX because that is where the big institutional money is hiding. I focus on semiconductors because they are the backbone of the new digital economy, but I am also very careful with my position sizing. When the SP 500 gets as extended as it is now, I start to scale back. I told you earlier I am moving from $20,000 positions down to $10,000. That is because when the market gets this stretched, it needs to breathe. It needs a pullback to form a new base. I am still bullish for the next 6 to 12 months, but I am not blind to the risks. A lot of people are going to get burned because they are chasing the green candles without a plan. You have to have discipline. You have to follow the charts and the data, not your emotions. I see a lot of people getting angry about the economy, and they use that anger as a reason not to invest. That is the biggest mistake you can make. The system is unfair, yes. The inequality is staggering, yes. But staying on the sidelines while they devalue your cash is not the answer. You have to play the game with the rules as they are, not as you wish they were. That means buying the dip on high-quality assets. That means staying consistent with your dollar cost, averaging into broad market funds. But it also means having the guts to buy into sectors like crypto when they are coming out of a winter. Coinbase is a perfect example of a play on the overall growth of a new asset class. It moves with Bitcoin, but it has the leverage of an exchange business model. I am looking for that breakout above 218 because it shows me the buyers are finally in control. And with TRX, I am looking for that 50-day moving average touch. It is a simple rule, but it works. Strong stocks and strong sectors tend to find support there. I am recording this after the market closed because I wanted to see if the recovery held, and it did. The fact that we recovered the morning sell-off tells me the bulls are still hungry. I am placing my market on open orders for tomorrow. I am keeping my stop losses tight because I respect the volatility. Wealth is built by staying in the game, not by hitting one home run and quitting. It is about compounding your gains over years and decades, and it is about understanding the macroeconomic forces that are pushing these prices higher. I know it is tough out there for a lot of people. I see the comments about rent and groceries every day, but that is why it is more important than ever to learn how to invest. If you do not find a way to own assets, you will be left behind by this redistribution. I am here to share my journey and my trades, so we can navigate this together. I am not an old guy in a suit giving you academic theories. I am in the trenches with you, looking at the same charts every single day. If you appreciate this honest look at the market, hit that like button. It really helps the channel reach more people who need to hear this, and make sure you are subscribed so you do not miss my next trade update. I will be checking my fills in the morning, and I will let you know how these positions develop. We are living through a historic period of economic change. It is scary, but it is also full of opportunity if you know where to look. Stay disciplined with your sizing and stay focused on the long term. Do not let the day-to-day noise scare you out of your positions. Follow the money, follow the institutions, and follow the charts. That is how we win in 2026. I will see you guys in the tomorrow's video. Stay safe and keep growing that wealth. I am keeping an eye on the housing market too, because that is where the real stress is showing. If mortgage rates stay high, it is going to eventually force a change in how the government handles the deficit. But until then, the asset party continues. I am not saying we are peaking today, but I am saying we are in the zone where you need to be cautious. Take your profits when you have them. Do not be greedy. A 20% gain in a month is incredible. Do not wait for 50% and watch it vanish. I have learned that the hard way over the last few years. Now I take my wins and I move to the next setup. Coinbase and TRX are my top picks for this week. Let's see if the breakout holds. I will be back with more data soon. Keep your risk managed and your mind sharp. The stock market is a tool for transferring wealth from the impatient to the patient. Be the patient one. I am going to go finish my research for the week. I will catch you all later. Peace out. The bull market is still in effect and I am riding it as long as I can, but I always keep one foot near the exit. That is how you survive this game. All right, talk to you soon. Good luck with the opening bell. Let S make some money. I am excited to see where these trades go. Stay humble and stay hungry. The world is changing fast, but we are changing with it. See you later.